Okay, so what I wanted to just kind of take a quick minute to review is this. This is called the tax formula. And this is really important because it looks like a lot, but stick with me here. This is basically a tax return. And so I want to just kind of go through and identify these different elements for you. And, most of you, well, all of you are obviously students, or you wouldn't be here, but, a couple of you are married and you've got some other, significant income going on. But for a lot of you, this isn't really critical right now, but in a couple of years, you're really going to be paying a lot of attention to this. So I thought it would be one of my goals for this class would be for you to be able to do your own simple tax return. Okay, so first off, let's just start with this concept of TI, taxable income. That's the amount that we pay tax on, okay? Lots of people are confused. It's like, oh, I make $20,000 a year, I pay tax on that. No, you don't. That's actually not how it works, because your gross income is not the same as your taxable income. So let's just go through this formula and walk through how to get to taxable income, how to calculate tax on it, how to compare that to what you've paid in during the year, right, on your paychecks. And the difference is your refund or the amount that you owe. So the first thing that you have to do is find something called adjusted gross income. And adjusted gross income is your gross income, which is what you make on your W-2s. Or if you're self-employed, it's the amount that you make from your business. Okay, there's a bunch of other things that can go into it, like rentals and trust funds and all that, but we're going to keep it really simple for our purposes. So for most of us, let's just say our gross income is the amount on the W-2. Then you are going to have some adjustments to that number. For example, if you put money into an IRA, that's an adjustment. If you put money into a health savings account, that's an adjustment. If you are paying on a student loan and you've got some interest, that's an adjustment. So there's quite a few of them. A lot of them are more complicated and aren't really relevant to us, but those kinds of examples I just gave you are very common. So here's everything from my W-2s minus my adjustments gives me AGI, adjusted gross income. Then from that number, before you get to your taxable income, everybody gets to subtract something called a standard deduction or your itemized deductions. Almost all of you, I'm sure, probably take standard deduction. It's around $12,000 a year if you're single. Okay, so everybody gets to subtract that before they get to TI. If you own a home, one of your itemized deductions is mortgage interest, and that will generally pop your itemized deductions up to be higher than your standard deduction. But again, we're really trying to learn how to just do a super simple tax return. And so for most of us, standard deduction is going to be appropriate. And that's what we're going to be using in our little easy example we do today. We no longer subtract personal exemptions. You can see that was suspended for 2018 through 2025. So we basically don't need to worry about that right now. And that takes us to taxable income. And that's what you calculate the tax on. So let me just recap this, and then I want to show you how you calculate tax. And then I want to tie this whole thing in to an actual tax return so you can see how they align. So gross income, your W-2s, rental income. If you're self-employed, you have a little side gig, you have a landscaping business in the summer or something. Okay, that's all your gross income. Adjustments, things like IRA contributions, HSA contributions, student loan interest, things like that, take us to AGI. Then we subtract a standard deduction that depends upon whether you're single or head of household or married filing jointly. And then that takes us down to TI. Then we're going to go learn how to use the tax tables to calculate tax. And from there, so then you figure out how much your tax is. Most of you, since you're in school, will have something called an education credit. And those can be worth thousands of dollars. If your parents pay for school and they claim you, they're going to be getting that credit. But if you pay for more than 50% of your own upkeep and you pay for your own school, you will need to calculate something called a higher education credit. And it can be worth a lot of money. I'm not going to do that in this simple tax return we're doing, just because it really seemed to throw people for a loop. And I don't want to make this super complicated, but just be aware that if you pay for your own education and you pay for your own upkeep, you have access to take a credit, which makes your tax bill a lot less, which makes your refund more. Okay, so any questions about what this basic tax formula looks like? Does it make sense? Okay, let's go. Let's see here. What does that mean? Can you guys still hear me? Okay, this is a tax table for a single taxpayer. That looks different. These tables look different if you're head of household, which means like you're a single parent, or if you're married. But again, just for ease of working this together, we're going to assume a single taxpayer, and your book uses tax year 2018 because it was published a couple of years ago. So this is what you will be using for the test and for your assignments and for what we're going to do today. I just put this here so you could see, obviously, that the brackets have gone up a little bit, but we will be using 2018 tax tables and tax forms to stay aligned with the textbook. Okay. So what this says, and I just want you to jot this down and we'll work it together. Say that my taxable income is $87,000. I want you to calculate my tax. $87,000. I'm single and I'm using the 2018 tax table. Now I'm going to explain this to you, and then I'm going to let you write out the algebraic formula and then solve for it. The way this table works is what it says is the first $9,525, my tax is 10%. Then the difference between these two numbers, or the next chunk of my taxable income, is taxed at 12%. And then the next chunk of income in here is taxed at 22%. Okay, that's called a progressive system. And then the last little piece, in other words, what's taxed above 82,501 up to what I have for TI, which is 87,000, that little chunk is taxed at 24%. So what I'd like you to do, can you guys all pull up the PowerPoint so you have the tax rates sitting somewhere to use them? Or you can get them out of your book. Is that okay? Okay, because what I want to do is pull up an Excel sheet and write out the algebra, and let's solve for this. And then I want to make a couple points, and then we'll move on to the lab chat, okay? So you need to have access to either this slide or the tax rates are on page 104. Okay, so I'm going to pull this down. Everyone with me? Okay. So the first $9,525 is taxed at 10%. You see that from the table? Then the next chunk, so figure out the difference between $9,526 and $38,700, because that's that next chunk of income. So I need to get my phone and hold on just a second. Okay, so that next chunk and if you don't know where something comes from, please speak up right away. Plus, and that next chunk. $43,799. That's a 20. So irritating. And then the last little bit, so if I make 87,000, that's 4,499 over that last amount. Okay, so let me go back and just show you where I got all these numbers. So I'm writing out the algebra. My taxable income's $87,000, and I'm taxed at all these different progressive chunks of income are taxed at different rates, right? And for example, this number 29,174, that's the difference between these two numbers, because that's a chunk of income that's taxed at 12%. Does that make sense? Okay. So you guys aren't really saying anything, so I'm assuming it's like, okay, we totally get this. Then that next number is the difference between 38,701 and 82,500. And the last number is how much my taxable income has gone into that next bracket of 24%. Right, that last 4,466. So solve for how much my federal income tax liability is.
Hey, Professor.
How much is it?
It's 4,499 for that last one instead of the 6,600 in your equation.
Oh, thank you. I'm sorry. What is it for?
4,499.
Thank you.
Yeah, and the tax was 15,168.92.
Okay, let me just do this really quick. 87,000 minus 82. Oh, yes, you were right. Indeed. Times 0.24 plus 14,089.5. Okay. So just trust me on this. This is the math. And I am recording this, so I'll capture it and I'll post it in our chapter 3 area. So my next question is this what I have to write a check out for? Is this my tax bill? Hopefully
No,
not.
you will have to subtract tax credits and deductions and other things, right?
So if that's my tax, maybe I've got some credits. There's child credits, there's higher education credits, right? There's lots of different kinds of credits. And then there's also, I've paid in during the year, haven't I? How do you pay in during the year? Anybody, if you've ever had a job and they tell you you're making $14 an hour, does your check reflect $14 an hour?
They take out federal and state tax.
Yeah, of course. Your taxes are taken out of your wages. You pay Social Security. You pay Medicare. Together, those are called FICA, right? 7.65%. You pay federal income tax. In Montana, you pay state income tax. So your $14 an hour, by the time you get it home on your check, it's probably $9.80 an hour, right? So you've paid in, hopefully, the majority of this during the year. So say that I've paid in $13,895. I haven't paid in and I don't have any credits. I'm going to have an amount due, right? Because I didn't pay in as much as my tax bill is. But say I've got $1,000, or no, let's say that I've got a $1,500 higher education credit, and I paid in with my paychecks. Now what's going to happen? Do I owe them money? No, I've got a refund, don't I? My tax bill's $15,169. I've got a credit. I paid amount in, so I actually, in this situation, have a refund, don't I? I'm getting a check back from the IRS. Okay, now let me just back up and make sure we're all on the same page before we go over to the tax return. I need to make 2 more points here. Okay, first off, I want somebody to answer this. Lily, what's the difference between gross income and taxable income? Are they the same thing?
Quiet, Stella. You said gross income, tax income. No, you have to take it out each instance.
Sorry, you were really fading in and out. Yeah, I can't hear you. Let me just see if that's on my end. Can
I'm sorry about that. The difference between the adjustments, right?
Yeah, sorry, I'm not, whatever's happening, I'm not getting a clear read on your audio. Let me just ask somebody else. Sorry, I'm not sure what's going on. Gwyneth, do you have, let me just see, can you say something just to see if it's all on my end?
Can you hear me?
Yeah, yep. So Lily, that must have been on your audio. So Gwyneth, what's the difference between gross income and taxable income?
Is gross income like all the money you earn throughout the year, and then taxable income is like the portion of your gross income that is like taxed?
Yes, exactly. That's exactly what it is. And if you were giving a super thorough answer, you would say the difference between gross income And taxable income is your standard deduction of 12,000 bucks if you're single and any adjustments. But you gave a layman's answer and that was absolutely correct. Okay. Next question. What kind of tax system do we have? Okay, is it an average tax system? Is it a progressive tax system? Is it a, what kind of tax system is it? Michael?
It's progressive.
It's progressive. Okay, great. Next question. This is really important. What is the difference between a marginal tax rate and an average tax rate? I'm going to give you the answer, and then I'm going to have you, with this little example we did, go figure the average taxes. Okay, so stick with me here. Marginal tax rate defines what your last dollar of taxable income was taxed at. Marginal tax rate defines what the last, or identifies what the last dollar of taxable income of TI was taxed at. So my first 9,500 bucks was at 10%. My next 29 was at 12. My next 44 was at 22. My last little bit of earnings here was taxed at 24%. So my marginal tax rate is 24%. This is really important for making decisions, because anything that I earn right now is going to be at this highest marginal tax rate, right? If somebody says, hey, Lise, I want to give you a $5,000 bonus, I don't care anymore about the 10% or the 12% or the 22%, because I'm here in the highest marginal tax bracket until I shift up to the next one, right? So this is important for planning for deductions and additional earnings. It is not at all the same as my average tax rate. And that's what I want you guys to go calculate right now. My average tax rate is, here was my tax bill, or my gross tax liability. Here was my TI. What was my average tax rate? So go see if you can figure that number for me.
17%?
Let's see. Average tax rate. %17.4%. It's going to always be less than your marginal tax rate, obviously, because those early chunks of money were taxed at lesser percentages. Okay. We use this for tax planning. We use this for making decisions about earnings or deductions. Now, last concept, and then we're going to go do a tax return because the time is just flying. Okay. What is the difference? What is the difference between a tax deduction and a tax credit? And people use these terms interchangeably, and they're not interchangeable at all. Down here, how much was that $1,500 credit worth to you? This isn't a trick question. Addie, how much? Go ahead.
I was going to say dollar for dollar, 15,000 or
yeah,
1,500.
It was $1 for dollar. It was like somebody just gave me 15 $1,500, right? Because it came straight off my tax bill. So the answer to what is a $1,500 tax credit worth to you is $1,500. But a tax deduction, stick with me here. If my gross income, I'm still on the same guy, but I'm going to give you more information about him, was 110,000. And he had adjustments, which is a fancy word for deductions, for adjusted gross income, right? So I'm back now talking about that formula that we looked at, right? And he had a $1,500 adjustment for AGI. And then he had his standard deduction was $12,000. Let's see, that number's not exactly right. 97.5. Let me do this really quick. Sorry, I'm trying to pull this off the top of my head. 87,000 plus 1,500 plus 12,000. Okay. Now here's my guy. Good grief. Why is that not letting me do 2 zeros? Okay, here's his taxable income, right? It's the same guy I'm using up here. But he had, let's say that this is his student loan interest. Is this $1,500 deduction worth as much as this $1,500 credit? Claudia, what do you think?
I'm not sure. I'm a little lost. I'm sorry.
No, it's okay. This isn't easy if you've never looked at it. Okay, so first off, can somebody just define what this is? We looked at that on the slides. This is called the what? It's just the tax formula, right? Gross income minus your adjustments minus your standard deduction gives you taxable income, right? And then you have to take your taxable income and go to the tables and calculate the liability. And then compare that and say, hey, how much did I pay in during the year? And do I have any credits? And then I get to figure out, so this whole thing, you know, it goes under here. This whole thing's the tax formula, right? What I'm trying to show now is a $1,500 deduction worth as much or the same or more as a tax credit?
It's worth less.
Okay, good. Why?
Because what it's doing is it's reducing your total taxable income, but you still will be being taxed by the same percentage, whereas a credit is actually giving you money.
Excellent. Very good. Super, super perfect answer. How much was this worth? How much did that $1,500 deduction buy me? We've all agreed it didn't buy me $1,500. It bought me something less than that. How much did it buy me? To calculate how much a deduction is worth, you have to multiply it by the highest marginal tax rate. So what I'm saying, looking back at this, is the deduction is worth a hell of a lot less to somebody that's lower income than it is to somebody that's up here in a higher marginal tax rate. See what I'm saying? Because if I'm in that 24% bracket and I have a $1,500 write-off, that saves me $1,500 times 24%. That just cut my tax bill $360. But if I'm only down here in the 10% bracket, that $1,500 deduction only bought me $150. So the answer, this is a little complex, but the answer is a credit is worth dollar for dollar what it is. A deduction is only worth the amount of the deduction times the highest marginal tax rate. Okay. Takeaways from this is you have to know the tax formula. Now we're going to take what we've learned here. Well, and also obviously you have to watch the other lectures that I did and do the other lab chat. I mean, it's all part of the reinforcing for this chapter. Now let's go take a look at the actual tax return. So what, does anybody have any questions they want to ask before we flip over to that?
I have one about the higher education tax credit.
Okay.
Is that only if you pay for school out of pocket and not through FAFSA?
So anything that you got for a scholarship doesn't count, but anything you took for out of as loans does count towards the credit.
Okay, cool.
So
Sweet.
say my school was $15,000 and I got a scholarship for 5 and I worked for 5 of it and I borrowed 5 of it. $10,000 of that I can use towards calculating my higher education credit.
That's dope. Sweet.
Yep. Yep. Okay. All right. So let's go take a look at this. On Moodle, I gave you a link to this very simple W-2 for our gal named Ella Berry. And again, we're just using 2018 tax return. We're using $12,000 for our standard deduction. That goes up every year, so it's higher now. And we're going to fill this out. So the first thing I'd like to do is just take a look at this W-2 so you can see what you're looking at. And then we'll go and try and put that into a tax return. So you guys have all seen these before, but it can still be kind of confusing. So box 1, and you might just jot these numbers down if you haven't printed them out because we need to put them into a tax return. So just for your own notes, box 1 is how much of your wages do you pay income tax on? Okay, so 54, and you don't use pennies in income tax returns. So $54,801 is what her taxable, her gross income is for FIT. Okay. Gross income, not her TI, because we've still got to do the whole tax formula. Okay, box 3 and 5 is how much is taxable for Social Security and Medicare. And you can see that number is like $5,200 higher. And I can tell you the reason for that is, well, okay, so just really super quickly, the difference between these boxes is usually because somebody is putting money away into a retirement plan and you don't have to pay federal income tax on that. So I don't know that for sure. I'd have to actually talk to her about this, but just eyeballing this, I'm pretty sure that she put about $5,200 away into her 401k. And again, just so you're clear, box 3 and 5, Social Security and Medicare, those taxes together are 7.65%. So that's a chunk of change. Box 2, federal income tax withheld, $4,393. That is this amount I was just talking about here. I mean, not the same number, but it's the amount they paid in. That comes from their W-2, $4,393. Okay, there's other ways to pay in, but again, we're just doing a super simple example. Here's the amount they paid in for Social Security and Medicare. And down here is the part that goes on your state income tax return. She paid in $2,751 of state income taxes. That doesn't go on your federal tax return, but that's obviously important when you're doing your Montana tax return. So write down these numbers, the 54,801 is important. The 4393 is important. And now we're going to go, I'm going to make this go down. And we want to go and take a look at a 1040. If you've already done this first lab chat, you'll know what a 1040 looks like. That lab chat is even a little bit more complicated than the one we're doing today because she's got student loan interest on that one. But for this one, I thought that I loaded that. Oh, I did. Okay, let me just make sure you guys all know how to do this. So the first, this irs.gov is where you get any tax form you need. Michael, it's where you'll go if you want to get information on higher education credits. You can just go in and type in American Opportunity Credit, and you'll get a whole set of conversation about how that works. So I went to irs.gov. I typed in 1040, and then I made sure to get a prior year because we're just using 2018. Okay. So I think I had asked you to have this accessible. You're going to need to be able to fill this out for the exam and for your homework. So obviously up here, I'm not going to take time to just fill in this kind of stuff, but she's single, Ella Berry, social security number, address and town, and no dependents. And here's where she signs. Okay, so really page one is with that said, a 2021 tax return, which you're probably doing or have done right now, is a little bit different. The format changes every flipping year. But I mean, I've just picked a year that looks like the book, so you have some reference. Okay. So here we are. This is the tax formula, you guys. Here's all the different kinds of gross income. And you come to line 7, adjusted gross income. You fill in minus the standard deduction on line 8. You come to TI on line 10. You calculate the tax on line 11. You carry that down to line 15. We're going to do all this, but I'm just trying to give you some notes to take. Your federal income tax withholding that we just looked at goes on line 16. Carry that down to line 18. That's your total payments. And then depending upon which is bigger, you either have a refund on line 20 or an amount you owe on line 22. So, do you guys have the hard copy in front of you that you can fill out, or do you have one up on the screen you can type in? Yes? Okay. I'm just going to give you a couple minutes to start to try and get the numbers that we looked at on the right lines. If you have questions, I'm just going to open the chat room. Just put your questions in the chat room. I'm just going to keep it quiet for about 5 minutes other than the chat room, and then we'll go over it together, okay?
Where's Ella's information?
It is on Ella Berry's fact set. Oh, does that not have a link? What the heck? Oh, here it is down here. Lab chat number 2, Ella Berry fact set. Okay.
Thank you.
Sure. So let's just touch base here. Super straightforward, one W-2, $54,801. She didn't have any interest, any dividends, any Social Security. On the first lab chat, you guys, she had some, or he or she, I think her name was Indigo. She had some student loan interest and you had to fill out a Schedule 1 to record that. And that number came through on this little line right here. And it was a deduction that reduced her AGI. We don't have that on this one, but you could. Now, line 8, standard deduction, and it tells you over here what they are. Therefore, TI, $42,801. Now I'm trying to calculate line 11. What's her tax? I go to the tax tables on the PowerPoint slide. Yes, you do calculate the taxes you did at the beginning of the Zoom. Yep. So I'm here using my tax table. First 95.25 at 10%. Next chunk at 12%. Last little chunk over the 38,701 at 22%. Wait, that's not the right number. How much was our TI again? 42,801. $42,801 minus the 38,701. So the last $4,100 is taxed at the 22%. So equals 953 plus plus. So I think her tax is 53.56. Is that what you guys got when you did this formula? Okay, good. I just want to make sure that everybody's clear on how to do the formula. So is this the amount she's got to write a check for? No. I don't see any credits or any additional taxes. This is a very, very simple tax return. Is she going to have a refund or is she going to have to pay in? Anybody?
Pay in.
Yep. No. Yes. I had to think about that. Sorry. Yeah. She's going to have to pay in. Yeah. She's not going to be happy at all. She's got to write a check for $963. She was under withheld. So here's what I would advise. Like I said, I've got another group coming on in 5 minutes.